Welcome to Revelator Trading. In this video, we are going to talk about how I find stocks that I want to backtest and hopefully ultimately be able to trade. So what I do is I use a tool called Finviz.com. So we'll go over there to Finviz.com and we are going to use their screener. So once you've gone to their homepage, you're going to click screener. All right, now TradingView does have a stock screener, and you can use it instead of this if you prefer. This is just what I find works best for me. All right, so once we've gotten to the screener, the first thing I want to talk about is money, so market cap. You want to go where the money already is. If there's not money in an asset, it's probably not going to be worth actively trading. Okay, we're not looking for the next big thing that might not be worth anything today, but it's going to become, the next Amazon, the next Coca-Cola, whatever these big companies that come to your mind are. That's not what we're doing here. What we're doing is we're looking for what already has money in it. So I typically prefer to trade large and mega cap stocks or companies that are worth $10 billion or more. So market cap is basically going to be you're going to multiply the share price by the outstanding shares, and that gives you your market cap. So that'll be your definition. So for this discussion, let's just start out with mega cap stocks, and you can see a list of companies that you probably recognize: Home Depot, Alphabet, Apple. These are all pretty much household names, especially if you live here in the U.S. And that brings me to the next topic. I do prefer to trade U.S. stocks. Just because I live in the U.S., I don't want to be trading a stock that's in a drastically different time zone where a news event might come out when the markets are closed and I might end up getting gapped out really badly. So I prefer to trade U.S. stocks for that reason. If you're in a different country, hey, you might not choose to trade U.S. stocks for the exact same reason. All right, so nothing xenophobic there, but that is my reasoning behind it. I don't want to get gapped out on news events or earning events. Okay, so we found stocks where there's money. Apple here, I mean, that's huge. That's almost $3 trillion market cap. That's pretty exciting to think about. All right, so there's money here. The next thing we need to talk about is volume. All right, so there needs to be people trading the stock. And over here, if you click volume once, it sorts by ascending volume. I'm wanting descending. I'm wanting to see the top traded stocks. And no surprise here, Tesla is at the top of that list. All right, so volume basically tells you liquidity. How many people are playing this game? Is there always going to be somebody to buy from or to sell to? The more volume there is, the more likely you're going to find somebody to trade with you. Okay, so we're looking for money, we're looking for liquidity, we're looking for that volume. And the next thing that you might want to look for also is volatility. How much does a stock move? Does it look like a roller coaster? Is there any time frames where it does look like a roller coaster? Does it form strong trends? These are all characteristics that I like to look for. Just for giggles, at this time we can also come over here and click large. And again, we see some very big household names. These are all stocks where there already is money and there are a lot of people trading it. All right, so these are going to meet our qualifications. Now, can you trade lower market cap stocks? Yeah, you sure can. The key that you're wanting to look for there is consistent volume. All right, so a lot of lower cap stocks, micro cap stocks, they don't have a ton of day-to-day volume. They'll have huge volume spikes anytime like there's an earnings report or there's some sort of news, but then the volume dries up. So you don't want to be holding a bag. When you have low volume, you have low liquidity. A lot of times the spreads get bigger. In other words, the gap in price between the buyers and sellers, that can be a huge gap. And your stop losses might fill at a much worse execution than you would have gotten had you traded something with volume. The other thing, of course, to consider is that business is a lot like trading. A lot of people don't want to hear this, but the majority of businesses are going to fail, just as the majority of traders will fail, and oftentimes for the same reasons. So if there isn't consistent volume behind a stock, to me, it's not worth trading. And then again, do you want to be trading low value things? So again, looking at it this way, this is like trading, silver and gold and diamonds, things that people universally recognize having value, as opposed to trading, NFTs and baseball cards and things like that. So, those items don't necessarily have much intrinsic value. They can be traded, but hey, it's up to you. But this is just, again, how I find things that I'm interested in back testing and I'm interested in trading. You do you, I'll do me. But these are the reasons why I prefer large and mega cap stocks. All right, so let's say we have found an asset. We go ahead and load that up on our chart. I've chosen Tesla. That's just because it's got amazing volume and it's got amazing volatility. Do I believe it's worth the market cap? No, I don't. But hey, who cares? A lot of people do, and that's why it's worth today what it is. And that means there's people excited about it, and there's tons of volume. So down here, I've got volume loaded up on the chart, and this is a 15-second chart. A 15-minute chart. If I go down to a 15-second chart, I can even look at some of these low volume. There's still over 1,000 shares being traded. Like, I can't move the market even on some of these low volume candles. Okay, so this is a great candidate for trading. It's got market cap and it's got liquidity. And it also has volatility. This is a nice uptrend coming out of a nice downtrend. So let's go back to that 15-minute chart. We've established that we have a high-value company with lots of volume. Next thing I like to do is I like to look at the analyzer. So I look over here. Now, am I getting a lot of signals? 68 signals in 1,350 candles. That's a good amount of signals. I'm getting more winning signals than losing signals. That's another good thing. I also see here that the average win is 411. The max loss drawdown is 246, which means I would use 247 as my stop loss. Again, I like where this is heading. So I may not like the company itself. I may not like Elon Musk. None of that matters. What matters is that this has everything I need as a trader to start back testing and then to develop a successful strategy around. All right, so we've talked about the stock market. There are obviously other assets to trade, some general guidelines there when it comes to like trading forex. Trading major pairs will give you tighter spreads. There's going to be more market participants. I do trade forex, and I exclusively trade the euro against the dollar. That to me has the best liquidity, the tightest spreads, and for those reasons, it just seems to work better with my trading strategies. No surprise there. You could trade crypto. Again, trading sketchy rug pull altcoins is probably going to lead you to disaster. Trading some of the bigger ones, you're probably going to have a little more success with. Again, use some caution there because there are no guarantees in crypto. There's no guarantees in the stock market either, but generally, Tesla's not going to close overnight. So again, crypto, that could be a whole different story. So what else is there? There's futures. Futures is another good candidate for trading. There's options. And some of these other things carry a lot more risk. There's a degree of margin or leverage involved with those things. And so you're going to need to do your due diligence and understand what the repercussions of trading those instruments are. So that's why I focused on stocks here. If you've never traded before, it's hard to beat stocks. All right. So talking about things that aren't worth trading, well, we've talked about, altcoins in the crypto market. That's really sketchy. Trading penny stocks. There's a lot of so-called trading gurus out there, and they put out these signals. Hey, I've got this insider scoop on this penny stock. It's going to pop, and everybody goes over there and buys it. You don't realize this fella's been, dollar cost averaging into this crappy asset over the last several months. Then he puts out that alert, and what you're doing by going over there and aping into it is you're providing his exit liquidity. So don't be falling prey to these so-called trading gurus. At Revelator, we're trying to teach you how to become your own trading guru. Okay, so don't be a copy trading sucker who's providing exit liquidity for a so-called expert. All right. So as the old saying goes, you could lead a horse to water, but you can't make him drink. So we've taken you to the water's edge. We've given you some basic good guidelines of how to get started in backtesting and finding things worthwhile backtesting and possibly to trade. We've showed you, we've taken you basically to that point, but we can't keep you out of, the mud puddles. We can't keep you out of the cesspools. It's really up to you to look for quality, determine what you define as quality, and to avoid the pitfalls. All right, so I hope this discussion has been insightful for how I find stocks that I'm going to backtest and then possibly trade. Be sure that you watch our other videos and read our knowledge base for additional trading education. If you haven't subscribed, please subscribe. Be sure to like and share our videos if you find some value in them. If you haven't signed up for our free indicator, I would encourage you to do that. That'll give you some priority in any questions that we might choose to answer. So be sure to do that. There's no obligation there. We're not going to try selling you a bunch of crap, but that just gives us a common basis. If you have questions, we can both be on the same page. I'm not going to, go through other indicators and work out things with those. So sign up for that free plan if you haven't done so already. It does give you read-only access to our Discord, so that's another learning resource that you'll have available to you. So as always, thanks for watching our videos, and we'll see you in the next one.